I'm Charlotte McLeod with the Investing News Network, and here today with me is Gerardo Del Real with the Outsider Club. Thanks so much for joining me.
Thank you for having me, Charlotte.
Of course. So this is a broad question, but I want to start off by getting your take on the resource space as a whole. We're 2 months away from the end of the year. What do you see?
I think tax loss selling is definitely affecting, like it does every year, the price of the junior equities specifically. And I think there's a massive disconnect right now with the underlying commodities and the equities associated with them. So what I mean by that is uranium is up 35% from the 2018 lows, but yet most of the uranium juniors really haven't kept up. And so tax loss selling season is definitely affecting that, but the setup is one of the best that I've seen in the resource space in my 11 years in the business.
So uranium might be an opportunity there. Are you liking that space right now?
You know, the running joke is that all the smart people have called the bottom in uranium for the past 5 years. So, that's the disclaimer. This is my first year saying that I believe we're at a bottom. I think with a lot of the utilities having to come back to the market in 2019 and just all the supply cuts that we've had, to me, it's as clear a trend as exists in the resource space right now.
What stocks in that space might people look at, or what are the characteristics of a company in uranium that you'd like?
You know, the great thing about bear markets is that they can be brutal and they decimate weak management teams, and they do a lot of our due diligence for us. So they do away with the management teams that don't know how to survive those markets. So the good news is for speculators in the space, there's not a lot of uranium companies left. So I'll give you a couple of good names of teams that have been successful in the past. Energy Fuels is a company I like. Fission Uranium is a company I like. And Azarga Uranium is another company that I really like. Excellent management teams, past success, and I think they're going to have a great 2019.
What do you think of all these uranium companies that are starting to come forward and say, oh, we have vanadium as well? Is that good? Is that bad?
I think it's a very niche market, and I think you have to be very careful when a company goes from a gold play to a lithium play to a uranium play to a vanadium play.
Sure.
Stick with management teams that have done it in the past. Keep it simple.
Okay, great advice. So that's a lot about uranium. Are there any other commodities where you see opportunity?
You know, I think lithium is way oversold from the equities perspective. There was a report earlier this year put out by Morgan Stanley that really affected the entire industry, especially the juniors. And I think you're starting to see a rebound, and I think that rebound will continue. I think even the majors are realizing that production is not as easy to scale up and ramp up as they thought it would be. And the bottom line is there's not a lot of great lithium assets in the world. So find juniors that have strategic locations, plenty of water, good management teams, and you'll be okay.
It's really interesting. I've had a few people say, oh, lithium, that's so 2016, but you think there's still some room there?
Absolutely. Absolutely. If you want to name Advantage Lithium, I think is an obvious takeout target. They're right next to two producers. I was at the project last year. I can tell you that the other two can't continue to produce without acquiring that land package. So somehow, some way, that's going to get worked out. And I'd be surprised if Advantage Lithium made it out of 2019 without being taken out.
Are you seeing M&A in the resource space as a whole? Is that something that's going to be happening more?
You know, I talked about how brutal the bear market has been, and the misallocation of capital in the last upcycle really did a lot for discipline with management. And so I think M&A is starting to finally pick up, but you haven't seen much of it because, frankly, boards are really, really skeptical of any new acquisitions. You're finally starting to see some. The merger with Barrick, I think that's a big deal. And I think the valuations right now that exist in the resource space, they're too compelling for them not to dip their toes back in the water.
Another thing that's come up for me a lot at this conference is funding in the space. Is there money available? Where is it coming from? Who's getting it?
Rick Rule had a line yesterday. He said everybody wants to be a contrarian when it's popular.
Okay.
Right? And so this space, it's a tough market right now for a lot of the juniors. This is exactly the time when you should be identifying those quality management teams and writing checks for them and purchasing the stock. This is the buy low part of buy low and sell high. I'm a contrarian by nature. I can tell you that I've been rewarded for being a contrarian by financing a company at 35 cents, then financing that same company at 20 cents, and then financing that company at 10 cents, right? Which is my way of saying there may be some more room to the downside with tax loss selling, but if you have a long enough timeline and you can ride that out, you're going to do very well in the next upcycle. Does that take 6 months? Does it take 12 months? Anybody that tells you exactly when it'll turn is not being truthful, but it's usually worth it.
Okay, and just because we haven't spoken before, you mentioned good management. What are your other criteria for investing in a stock?
Even before good management, share structure, because that will tell you how much management respects its shareholders, right? So who owns the cheap shares? At what price did they go public? What were the seed shares? What would that look like, right? And so share structure to me is as clear an indicator about how management approaches their shareholders and how much they respect their shareholders. So I would start there.
Okay, and I guess as we finish up, what advice would you leave investors with?
Know why you're buying a company. Don't confuse share price performance with a company adding value, because right now those are two very different things. Almaden Minerals is an example. They own a mill, a mint condition mill that has a replacement value of $70 million US. Their entire market cap is $56 million US. And you get 4.5 million gold equivalent ounces for free and an excellent management team. That's the kind of disconnect that exists in the market right now. And if you can identify why you own Almaden Minerals as an example, what the company's doing, you're going to do very well when that cycle turns back up.
Great, thank you so much.